Hello again, people. Right, apologies. I can't help myself, I'm afraid, making these videos when things occur to me, and I'm just waiting for a coffee to cool down, and I guess that's what will happen. I make these promises to myself. I'm going to spend less time online. Then I open a chart, see a trade, and can't help myself. Now, I've got this stripped out template on here, and this is why I love MT4. You can set up all sorts for everything, and I'm looking at gold, and the reason I'm making this video to sort of complement the previous one, literally an hour ago or whatever, is because all of us as traders get, perhaps, or me in particular, but I'm guessing others do too, you get confused. You go away from your charts, you forget what you were looking at. Perhaps you're looking at too many charts, you're looking at too many different time frames, and one of the simplest ways to undo the confusion is get back to basics, which is why I like to emphasize just understanding the candlesticks, the 3 candle reversals, a few important levels. We can see yesterday's, in fact it was 3 days daily open. That's the daily open line of, that must be what, we're Thursday to Friday today, so Wednesday, Thursday, Friday. So, and look, what is happening here. Price is approaching that level, and it's no surprise that is a significant resistance acting as support. Then price took off from it. So all of these levels, they're self-fulfilling prophecies, but that's not to say it diminishes their importance. It is just why they are important. Much the same as any MA. You could put the 200, the 100, the EMA, the SMA. All of them will at some point fulfill themselves. So again, the reason for this video is that, and a thought that occurred to me while I was wandering around the fields again this morning, is that you have to develop your own method. It is the only way forward, and the important thing also is that the price action and your choice of a momentum indicator need to be your choice. The patterns you trade need to be your choice. My choice is 3 candle reversals. My choice prior to that was to understand 2B reversals, as I've talked about, 1, 2, 3 higher low and lower high reversals. Some say they're called cup and handle, but the important is when you're away from the charts, just clear your charts down if that works for you. Take a breath, and then just understand what the charts are telling you. And the point of this video really is to remind you that timing is everything, and multi-time frame analysis is your aid to perfect timing. And that goes from the hourly chart, the 4-hourly chart, the weekly chart. I always used to like to start on the weekly chart and then look at the daily. But critically, if we were looking to short this here, which you've got every reason to consider shorting it at about this level here, to test this level here, then just make sure your multi-time frame analysis agrees with it. And this is where the histogram comes in so powerfully, because every one of these 1-hour bars is growing in momentum. It's just getting stronger and stronger and stronger to the downside. Now that, and much the same as I always say, look back at history. Look back at history on your charts. Look what happened when you had rising momentum, consecutive hours, just pushed price up. Past history does repeat itself. You get all these idiots online that say history doesn't repeat itself, charts mean nothing. Kick them in the goolies metaphorically and tell them to piss off, excuse my French, because You've got it on your charts, and as I've said in the last 3 or 4 tweets, all you need, everything you need to trade profitably is on your charts. And the guy that devised the dragon with the 34 EMAs could just as easily be the 33s, 32s, 35s, whatever. The guy that picked the 89 EMA, that could just as easily have been the 90, 93 or 85. You know, they are all arbitrary numbers, but someone probably has been back, looked at a few statistics, created a few patterns, as it were, EMAs and the dragon, and thought, yeah, that'll do. There's no reason why it should not be another number, as I've just mentioned. But critically, these levels, 20 and minus 20, are again arbitrary levels. The person that devised this, and it's not necessarily Harry Potter on TradingView, H. Potter. It's probably someone way before that on Forex Factory. You know, all of these indicators get bastardized, if you like, by new traders that think they can do something better, and often they do. Much same as my 3 candle reversal was a bastardized version of the 2B reversal. So getting back to the point, timing is everything. So what do we know from this chart? Well, we know at this point here, price went from being above 0 to below 0. We have a 3 candle reversal. We have resistance up here. We have traditional long-wicked sort of shooting star, hammer style candle up there. And look what happened when you get these wicks bust through. You know, you go to the line chart, use every tool in your toolbox. You can see 3 or 4 touches of the lines. You know, there is no substitute for devising your own strategy. And that's the point of all these last few videos, because I don't want to keep creating videos forever. It just confuses things. I don't want to keep posting charts and adding new little nuances forever. It just confuses things. Basics work, and then you add whatever fortifies your ideas, if you like. So, you know, every video I've created, well, not every, but the majority of videos I've created have value, hopefully. None of them are right or wrong ways to trade. I think the most important thing to take away from anything I've done on here is that price action works. And that's all you need on your charts. We can get rid of the dragon and all its bits and pieces. And I've thickened up the 89 EMA and put it on there manually, so that can go too. But you know, everything you need is on your charts. Here's a critical level here as well. Resistance, support, support, finally broke, used as resistance again, used as support again, and then now it's being tested as support. You know, it's not rocket science, guys. And then all you do is work out how to use your RSI, as I started to say here, 3 candle reversal down, RSI change from above 0 to below 0, and then we know we have a big change of direction with a potential to retest this significant level here. So how do we trade that? Well, we check the H4, and the H4 is a massive engulfing bar with a change from above the 20 to below the 0 line, a red bar there hiding itself behind a green dotted line. Confirms our bearish bias, if you like. And then we just drop down the time frames. We've got our H1 we talked about just now, and then we know we have to move to the next hourly bar, and we can time our entries just continually using the information on every time frame. We can clearly see there is a level broken there, that whole level there, and then we can clearly see prices come back to test the low of that candle. That low is significant. That is a swing higher low on a 5-minute chart. You know, keep moving down the time frames, keep watching the RSI. Look what happened. We had a bust, pullback, break and close below it, strong momentum again. We could have traded that, preempted that move using this one here and using the lower time frames. That's what I'm talking about. We are constantly moving between the time frames, using the information on our charts to our advantage. Here we can clearly see now we've got red bars coming into the mix. We can clearly see there was a string of green bars there, green candles, that were clearly a swing on the line chart. There's the this is the series of lower highs, or high lows should I say, in an uptrend with a gap. We talk about the gaps, the opportunities given to us to find liquidity, in other words the new buyers on price. And once again we've got a gap between here and here, and price filled it. And we constantly use, and this is what I do day in day out. You know, I say I take multiple trades a day. I do. If I come back to the charts like I have just now and see an opportunity to fill a level, to find liquidity, because as you know now, I 100%, 110% believe algorithms drive price. You know, traders just follow the algorithms now. You know, why would it be the other way round? It's not. You know, everything in the world is computerized. God forbid we lose the internet, we will be in trouble. You know, that's the subject of another video. I've talked about that. Make sure you have backup phone lines to your brokers. And an ongoing project for myself now is to learn to trade, teach myself to hold trades for longer periods. You know, we have a clear area down here now. I haven't looked on the higher time frames. I'm not going to complicate things by doing that, but there is a clear area, massive zone there, but we have to be aware of what's on the left hand side. But as I say, I'm not going to complicate that. So it's all about timing, multiple time frame analysis. You know, every time frame tells its own story, and as a consequence, this is why this is my go-to indicator now, combined with 3 candle reversals and you know, everything you need now, guys, is on this video channel. You just got to use it to your advantage and try and concentrate on one aspect. And if you don't concentrate on anything else, I can't recommend enough concentrating on the RSI histo and 3 candle reversals and how supply and demand works. Okay, thanks for watching. Have a great day.